Good morning or afternoon, everyone. Welcome to our Q&A Cafe for Business One. Thank you for joining us today. We have Alex Waddell, and he is presenting on finance cost dimensions with Business One, of course. Just a reminder that I am recording this session, so I'll keep everyone on mute for the duration of the session. If you have any questions or just want to chat, put your questions in the questions or the chat box, and we'll get to them when we can. Also, this recording will go out with an email about 2 days after the session, along with information on how to register for the next Business One Q&A Cafe, which is on September 3rd. It's personal data in SAP Business One, so look out for that one. If you ever want to go on our website and see all of our Q&A Cafe sessions, just go to our resources page, scroll all the way down, and then there's a webinar table there that you can sign up for all of the sessions. So without further ado, I'll put myself on mute and I will hand it over to Alex.
Thank you, Kayla. Welcome everybody. So today's session, we're going to sort of compare and contrast cost accounting, cost dimensions versus segmentation in GL accounts. So like Kayla said, if you have any questions, feel free to drop them into the question panel or the chat panel. I can see both of those, whatever is easiest for you. And yeah, in fact, I'm kind of curious if people who are attending have had any exposure to cost accounting at all, or if you have, if maybe you know a little bit about it and you're just hoping to learn more. I'm curious to know kind of what the audience is comprised of. So feel free to drop that information in and let me know a little bit more about why you're here. So with that, I will get started. So when we talk about cost accounting in B1, this is a fairly, well, it's a fairly old feature. It's been around for a few years, but it is newer than the segmentation, which has been there since the beginning. And when I say segmentation, what I'm referring to is inside your chart of accounts, you have the potential when you designed your system to add cost dimensions to capture different data. And so historically, this is kind of what would handle the cost accounting, is anything after the natural segment. So your GL account number may look like this. This is the out of the box one that comes with SAP. It's a little bit lengthy, actually. Chances are if you have a custom built one, you probably have a 5 or 6 digit GL account. And that first digit, we would refer to that as your natural segment. And then these are segments after that, additional segments that are added to the system, which would have certain specific behavior. So when you're setting up the system, you decide how many of these segments you have, what they're going to be used for. You would give them a name. So in the case of these accounts here, and I should just mention that your balance sheet accounts, everything that you're using segmentation for, that has to be consistent through your whole chart of accounts, meaning even if it doesn't really mean anything to your balance sheet, which it often doesn't, you have to give it a value. So in here, they've just used 0, 1. Commonly, we'll see 0, 0. 0, 0 is probably a little bit smarter because you don't have to type it. It'll just, you know, 0 fill that information. But that really means you're not setting a value, or it's just the default value. And then where this is typically useful is in your profit and loss. So if we go down to your revenue accounts, we might see segmentation here. And in this particular case, just because this is a demo environment, there's not a lot of great data set up, but I'll give you an idea of what this means. So when we go into our specific segmentation, we can see that this one really represents a geography. So we could easily create an account here and we could have, you know, sales revenue domestic for our 2 different geographies. And then we've got another segment here, which looks like it's just defaulting to the 1. So no pop-up is coming up. And the same thing with this one here. So these ones that don't have additional values, we're probably put in there for future growth, because once you enable your system and you start booking journal entries, you cannot add segments. So what do segments capture? They capture any kind of a reporting dimension outside of your natural GL account. So examples of that might be geography, like you saw with that Calgary-Houston example. It could be a department, it could be a line of business, or product line. So whatever it is that you want to account on and be able to easily filter information. So if, for example, I did have another account here for revenue, for sales revenue between my two regions, my Houston and my Calgary, then I could easily run a report, and I could make that report. I don't know if I've got the right number of zeros there. It doesn't matter. I'm just going to guess. So let's say I create the same thing for Calgary, and we call this sales revenue Calgary. Oops, I'm sorry, I put that in the wrong field. Sales revenue. Get rid of that. And we add this. Then we have a easier way to I'm getting stymied on the number of zeros here. Okay, so this one's defaulted to the US, and then our third segment is general administration, so that's probably something for future growth, and then I'm going to add this. Okay, so now if I want to run an income statement, I could easily filter on segment 1 or segment 2 in order to run an income statement for Houston versus an income statement for Calgary. So the concept of dimension accounting is very similar with cost dimensions. And I'm using the word dimension sort of interchangeably because that's really what it is. When we talk about cost accounting, uh, the concept for how it's set up is the same, but the way that it behaves is a little bit differently. So in cost accounting, we would create a specific number of dimensions and similar to this, and we would want to give them names. So in this environment, 2 dimensions have been activated. So segmentation on your GL account versus freestanding cost dimensions changes the way that you're going to input data into the system. So when I'm coding a document, I would have to choose an object in the system that is tied to a specific GL account, which is going to take me to my Houston revenue or to my Calgary revenue. If I'm using this solution here, and let's say instead I designed my system and I wanted this to be my geography, or maybe this is my department, and maybe this is my geography. Then on each document, in addition to selecting my object, which selects my GL account, I would have the ability to then select the dimension. And that right there is your single biggest difference. So you're kind of empowering your users to adjust the cost accounting on the fly in the document versus having to configure it in the system and potentially create more complex GL determinations or more master data, exponentially more master data to cover it. So I may have to have sales objects for my Calgary versus my Houston versus having just a single sales object to put on, an AR invoice, and then the user selects the geography there. So the way your system ultimately gets configured kind of depends on your business needs there. And if it is something like a line of business that is very fluctuating or a department, chances are it makes more sense in a cost dimension. If it's something geographical, potentially it makes more sense to put it in an accounting segment. The reason being is that we have the ability to associate warehouses that you use, and warehouses are geographically denoted in conjunction with selecting materials. So oftentimes it would make sense. So a lot of thought gets put into that when you're designing your system. But ultimately, once you make that decision, you're a little bit married to it. You certainly can't go back and change your GL segmentation, but you can go back and you can do quite a bit of work with the cost dimensions. So for example, I can come along in the future and you can see that I can start enabling new cost dimensions, but I cannot create additional segmentations, which is the reason why, future growth ones may have been put there in the first place. So let's look a little bit about how they actually work in the system. So once you've created your cost dimension labels, so this is essentially what are these buckets going to represent, you would then start creating cost centers. And so in this environment, there's some cost centers set up. So let's go ahead and look at them. I'm very confident there are cost centers set up. Let's try this again. There we go. So here is one that's assigned to this dimension that we called geography. And I can just kind of go through these records. And here's one, so we called that first one department. So there's a sales department, and there's a development department, and there's a support department. So because these are freestanding, if I create a new department in the future or a new geography, all I literally have to do is go into my add mode and give it a number and a name, and it's available to be used. When we're talking about GL dimensions, I have to go and I have to replicate it across every single GL account that I'm using, like you've seen here. So if I were to create a new geography outside of Houston, then I would have to go ahead and link that to every single one of these GL accounts. If I'm using geography down here, I just have to create the new value and then start using it on the documents. So let's talk a little bit about how that looks in your documents. So it doesn't matter what document you're using, whether it's an AP invoice or an AR invoice. We can just do like a simple journal entry. So here I'm selecting my GL account, and then my GL account has all of my information in it. So if I'm choosing my information here, I'm automatically selecting that information. If I'm doing something like a purchasing document, I may not be an accountant type person. I may just be working off of an item master list like this. And then I would potentially be selecting just an object in the system, which is associated to a GL account. And I have no control over changing that item. So depending on what I buy here, it's going to drive it to a GL account. And through some GL determination logic, potentially, like I mentioned, the warehouse, other information that's set up in the back end of the system, it's going to determine which GL account it needs to code this computer monitor to. And you can expose that field and show it here, but that's not typically a common practice. People that are doing the purchase orders probably don't really care about the accounting. Now, if you're using the cost dimension, then you're making it incumbent upon a person to do that coding themselves. So then they would have to go to the cost dimension field and they would have to fill out that information. So is this for the sales department? Is this for the development department or support? So if I say this is for sales, that's been coded. And now that cost dimension is associated with the journal entry that'll be created ultimately by the payables invoice. And those two pieces of information are working independently to create the accounting record. So what are the pros and cons of that? As I mentioned before, the pros are you don't have to create, exponentially more GL accounts. You have the flexibility of letting people at the document level control this information. And that can be a pro, but sometimes that can be a con. Maybe as part of your business, you would rather have the item drive the designation of where something is going to land. So those are all things that you'd want to take into consideration when you're building out your solution. So anywhere that you are doing any kind of a document, you have access to the dimension field. So for example, I can put it here in this department field on a journal entry. So I'm going to just do a quick journal entry here. Choose some miscellaneous account to book this to. Okay. So now we know some data has been entered against that cost dimension. One thing you may be wondering is how do you control whether or not um, cost dimensions must be used by the user or are optional by the user? And that is also controlled in your chart of accounts. So if we go down to your expenses or revenues, you do have the ability to enable this checkbox here. And when you turn this on, what you're saying is that it is mandatory to put in a cost dimension whenever you are using that specific GL account. You could set a default so the system will try and determine it if the user doesn't know, but oftentimes you would leave this blank so that the user just gets either a warning or a hard block that says they can't proceed without entering a cost dimension. That is a really important consideration. If you are going to activate cost accounting and you want to activate it, to do deeper income statement analysis, you're going to want to make sure that you don't have any entries going through that aren't being associated with a department or a geography or whatever dimension that you've created. Otherwise, you sort of have these orphan transactions. And if you were then to run an income statement by department, you could have misstated costs where it hasn't captured everything because you haven't made these fields mandatory. Whereas you don't really have that problem with accounting segments because the segment is built right into the GL account. So that's another consideration, mitigated with the distribution rule. Now let's talk a little bit about the reporting on these cost dimensions. So if we are running let's say some sort of a financial, and there's specific reports under the cost accounting reports, I'll come back to those in a moment. But even if you're running a regular financial report and you want to run, let's say a profit and loss is probably the most commonplace. So you have two different buttons here. You have the choose segments. So if I'm choosing the GL segments as my parameter for how I want to run my dimension, then I can go in here and I could say, okay, I want to run it for a specific division or region, and I can indicate which one I want to run. Do I want to run the head office income statement or the Calgary income statement? I can accomplish the same thing with my cost accounting dimensions by going to the expanded button, and I can go to my department here. And right now you can see that this is actually set to search out sales. So I'm just going to take that out for a moment. And I don't have a lot of data in my 2020 test environment, but that's okay. So here you can see that we've got a bunch of entries in the system. So there's our $25,000 entry. There's our so some previous entries for sales revenues, but this is running it across the entire system. So if I were to now go in here and say, okay, I want to expand this and I want to change it to focus on a specific department. So we will just run sales. And you can see now these amounts have changed and some of the rows are missing. So this one is just filtering out any journal vouchers that had that particular cost dimension. So a couple other things I'll mention about the cost accounting. You do have the ability to do a little bit more extensive behavior. So for example, we can create something called a distribution rule, which splits costs across multiple dimensions with a single line entry. So when we create a distribution rule, we could call it, well, we can call it whatever we want, and maybe I'll just give it a number. And we'll just say split, and then we'll focus it on the department. And then down here, we can go in and we can choose our sales department, our development department, and our support department. And so you could do something like this. You could say maybe this is 60, 30, and 10. And out of 100. And I'll just flip through here. There's some other ones that have been created. So you don't necessarily have to do a percentage like I did. You could do this total could represent anything. So this one looks like it's more like an allocation of employees. So it's saying maybe there's 175 employees, 25 employees in this department, 120, 30 there. So however you want to create those metrics, you can make these distributions have an effective date, a from to date. And when you use these distribution rules, then you're giving the ability to kind of just doing a simple retrieval to do those kind of allocation splits for you. So if I were to process an AP invoice now, and I don't have a great selection of suppliers, so we'll just use this guy. Oops. And I'm going to choose a GL account. So let's say this is an insurance expense. So I'm going to drive it to a specific GL account. And then I'm going to choose in my departments, I have my original departments, but I also have access to those cost distribution dimensions as well. So if I choose the one I just created called split, and maybe it's all for the same geography area here, use a nice even number. And just to keep it simple, we'll just say it's non-taxable. So a couple things to know about this type of transaction is when we look at the journal entry, it still is only a single row. It's just focusing that insurance expense instead of it being on the one department, it is now on this distribution rule. How do you see that distribution rule information? You have to run it through the cost allocation reports. So if we go back to financials and we look at some sort of a distribution report, so we should be able to run this one here. So we can see that we've got our split department, our 10,000, and it's allocating to these subdepartments based on the split. So there's my, sorry, let me just move that over. So there's my split, my 6,000, my 3,000, my 1,000 from my formula. Now, to be honest, I'm not sure I really like this feature for a couple of reasons. One reason is you have to depend on the cast accounting reports in order for this to be meaningful. So this isn't truly an income statement. This is, more of like a GL summary report. There's a few different versions, but most of these cost accounting reports, have a very similar look and feel. If I wanted to run, let's say, that original report that I showed you, the financial report, so for example, our profit and loss, this is a major thing to consider. So I see this as a limitation. What we've just done is if I'm running my sales department, I will not get my $6,000 expense showing up in the report. And the reason being is because my income statement report does not understand this cost distribution rule. It just thinks that something was coded to a distribution called split or 90. So I would literally have to go in here and run a separate income statement just for this split. That's not really meaningful because this is just giving me 100% of what's coded into that particular field. So it's showing my entire $10,000 invoice. It's not showing the split. So keep that in mind. So your financial reports do not understand distribution rules. They only understand the static label that was put into that field. That's important to understand. However, if you do like this feature, you could use it. Just remember, you're going to have to use the reports that come in cost accounting in order to support that feature of doing the splits. So I think, I mean, those are the main, maybe I'll just pause for a second. I don't see any questions coming up. Does anybody have any questions about what they've seen so far? Is there anybody on the meeting that has used the cost accounting before? Okay. So those are the main elements. In future sessions, we might get into more detail on how to do GL distributions using the full segmentation. That's probably something that warrants its own, conversation. And there's been some limited sessions on that in the past as well. So you can find those on our YouTube site. But if you do want to find out more information around how cost accounting could work, feel free to reach out to your representative, and we can set up a deeper dive, or we can get into a discussion on how it could be meaningful to your business in particular. So that's what I had to show today. Thank you all for joining. Not too late if anybody has any last minute questions. Otherwise, I will hand it back to Kayla.
Great, thank you, Alex. And we'll see everyone for the next session, which is on September 3rd, same time, same place, for the Q&A Cafe Personal Data in SAP Business One on September 3rd. So thank you so much. Have a great day.